So guys, this is my technical analysis on gold. If you can see, the market is on downtrend on H4 time frame and D1 candlestick using smart money concept. I am looking for some buy or sell today, combing with CPI news today at 3:30 p.m. Kenyan time. And also, I want to teach you how you can analyze market using fundamental events, especially CPI today, combining it with technical analysis. So guys, this is what I'm expecting today. As you know, today we are having some CPI event. So if you come to the Forex factory, so these are the events they were expecting today. The CPI, the Consumer Price Index. So it will be out today at 3:30 Kenyan time. So I want to analyze for you how you can trade the CPI. So this is gold outlook to be, I'm expecting the CPI. I'm expecting to sell 0.37. So these are the three reasons how you can trade the CPI, the Consumer Price Index. So if you can look at this is some analysis I've done, and I'm expecting all to push down today after CPI news come out. So this is the outlook on gold. This is the one candlestick. So let me move to 1 hour time frame. So this is how the 1 hour time frame looks like. So on 1 hour time frame, we are on a bearish market. The market is on a bearish. So you can see the market is on a downtrend. So you can see this was our higher high. Our higher high. The next we had a break of structure to above. We had another break of structure. We had another break of structure. This is a song that break the structure above. So we had a change of character here. The market went above. The market has been on a bearish trend. So as you can see, and previously the market has been rallying up. The market has been on an uptrend. So let me show you how you can analyze the CPI. So this is what can happen today. So let me explain for you how you can trade the CPI. So if today's CPI comes out at the forecasted values or higher, here is what will happen on gold. So this is what I'm expecting of the disappearing. Let's say, let me right here. So for example, let's see, this is a previous. The previous last month CPI, it was 0.2. The CPI amount per month, it was 0.2. The CPI amount per month, it was 0.3. The CPI year per year, it was 2.7. So they have projected this as a forecast. The CPI, the core CPI will be at 0.3. This is the forecast and not the actual news. 3:23. So the actual will be here after 3:30, it will be out. So this is what can happen if, for example, we say the values come higher. Let's say 0.3. It comes exactly as this. We will be expecting a stronger dollar, and you know. So, guys, as you know, today is CPI news event at 3:30 p.m. Kenyan time, and I want to educate you how you can analyze CPI event to make some dollars. So, basically, this is a key fundamental event that affects us dollar. So, this is how to read it and interpret if today's CPI, Consumer Price Index, comes out at the forecasted values or higher. Gold usually trades against the dollar. So we'll be expecting a higher CPI than the forecast means inflation is running hot. Here's what typically happens to gold. Exodus/USD. Higher CPI than forecast means inflation is running hot. So what will happen? So if the values come higher or they come exact as the forecasted price or the actual comes out higher than the forecast, here's what you will get. The market would expect the Federal Reserve to stay hawkish or even raise rates further. Higher interest rate expectations tend to make the U.S. dollar stronger because investors expect better yields on USD assets. A stronger dollar usually pressures gold prices lower because gold is priced in USD and becomes more expensive for non-dollar buyers. So the market will expect the Federal Reserve to stay hawkish, or they can even raise the interest. However, in cases where inflation is much higher than expected, some investors may buy gold as an inflation hedge, but that effect is usually outweighed in the short term by the stronger USD reaction. They can raise the rates further. So what will happen if the interest rates are higher? And any higher interest rate expectations tend to make the US dollar stronger. So for today, if CPI is at or above forecast, 0.2% M/M, 2.9% year over year, the initial move is likely down in gold. The dollar will be strong, and when the dollar is strong, investors will expect yields on USD assets. A stronger dollar usually pressures gold prices down. If CPI is significantly above forecast, e.g., 0.4% M/M, or 3% year over year. The drop in gold could be sharper. Usually when the dollar is strong, it makes the gold valueless. If CPI comes in lower than forecast, gold could rally sharply due to reduced rate hike expectations. Many people will tend to pull their resources, and so if the actual news comes higher than the forecasted, we will tend to have a strong dollar. And when the dollar is strong, gold will tend to be valueless. And when the gold is valueless, we'll be expecting to sell on gold since the dollar is so strong. Many may ask, what happens on gold if the dollar is stronger? When the U.S. dollar is stronger, gold usually moves down, and here's why. Gold is priced in USD. If the dollar strengthens, it takes fewer dollars to buy the same amount of gold, so the price in USD terms tends to fall. A strong dollar often comes with higher U.S. interest rate expectations, which makes interest-bearing assets like bonds more attractive compared to gold, which doesn't yield interest. Global buyers using other currencies find gold more expensive when the USD rises, reducing demand. So today, if the CPI will be above, let's say, 0.2% a month per month, then 2.9 per year. Typical chain reaction. USD strengthens 2. The initial move is likely down in gold. Gold demand falls 3. Gold price drops. So we will be expecting a down movement on gold, or the value comes out lower than the forecast. We will be expecting gold to rally up. That's why high-impact USD-positive news, like higher than expected CPI, strong NFV, or hawkish Fed comments, often pushes gold down in the short term. So this is what can happen. If you want, I can give you today's potential gold price levels where a stronger dollar could cause a reversal or breakout after CPI. If the values come higher than the forecast, this is what we will be expecting. We'll be expecting a drop in gold. Make sure to follow my page for more updates and subscribe to Acapella Forex Hub Academy. And if the values come higher than the forecasted or as the forecasted price, we will be expecting a downtrend. And if the values come lower, we'll be expecting an uptrend on gold, a continuation of the uptrend on gold. So we'll keep in touch if after the news have come out.